Shares of Hims and Hers have been all over the place over the past couple of weeks. It was one of the best performing stocks so far in 2025. Just a couple of weeks ago, earnings came and we found out that the semaglutide shortage is going to be ending. That means that they're going to stop selling some of their GLP-1 products probably about the end of the first quarter. But the big news today is that they're going to be shutting down one of their dermatology businesses. Now, the headline sounds a little bit worse than the actual news. The headline is, and this came from the Business Insider, they're going to be shutting down their dermatology business. That's not really true. They're shutting down Apostrophe, a company they acquired a couple of years ago, and they're moving that to the HIMSS and Hers brand. So if you want those kind of products, now you need to go to hims.com or hers.com. In the grand scheme of things, this is absolutely the right thing to do. HIMSS and Hers is building a platform. They want everything to be on the HIMSS and Hers platform. It's confusing if some of your products are available on Apostrophe, some of them are available on hims.com, some of them are available on hers.com. So this makes sense with that context, but that's not really the way it's being reported. So I want to go through the actual details today and then maybe put a little bit of context to exactly what's going on with the stock, because this volatility is something that I'm sure investors are very worried about. As a long-term investor, I'm not particularly concerned because operations are moving in the right direction. And if you have a 5, 10, 20-year time horizon, I think HIMSS and Hers is very well positioned and actually a pretty cheap stock, but I'll get to that a little bit later. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the stock movement. And just wanted to show this to just acknowledge what a crazy year it's been for HIMSS and Hers. You can see so far this year, shares are up almost 50% as of the close of trading on Friday. So that's phenomenal results. But things have just been crazy the last few weeks. Since peaking on February 19th, shares are down 47.7%. So if you're buying the stock at that peak, trying to trade this, that's probably not going particularly well. But over the past year, shares are up 150%. So really depends on your time horizon. This is one of the reasons that when stocks go parabolic like this, you don't necessarily want to get aggressive at that point. That's when you want to be a little bit cautious. So the last time I was buying shares was early February, down a little bit from there, but going to ride this out for the long term. But I do want to go through exactly what they announced with Apostrophe. This is Apostrophe's site today, and this was the announcement that came as a bit of a surprise. Actually didn't think this was handled particularly well by HIMSS and Hers. It says Apostrophe is being discontinued and all current subscriptions will be canceled as of March 7th, 2025. That is today. If you're entitled to a refund, we'll process that over the next couple of weeks. Over the next 30 days, you'll still be able to access your provider team and receive support for your patient account over this 30-day period. Apostrophe platform will be disabled. That makes sense in the context of wanting to move customers to HIMSS and Hers, which is this next part. If you would like to seek alternative treatment, we recommend going through HIMSS or Hers. We'll be happy to assist in transferring your prescription to a pharmacy of your choice. If possible, we apologize for any inconvenience. Now, shutting down this kind of site, not necessarily all that big of a surprise given the success of hims.com and hers.com. But what I think is a little bit surprising is they're not just porting customers over to the HIMSS and Hers sites. I don't know if there's any sort of details behind that make that a little bit more impossible. But I think that's worth noting. I don't think this is the best customer experience, but there may be reasons behind the scenes for that. But I do want to show where customers are going to end up going, because this is actually where they would go for a lot of their treatments for dermatology products, things that were previously going to be found on a place like Apostrophe. That's going to now go through HIMSS, and also the same on the Hers site. This is also not one of the segments that the company is going to be de-emphasizing. They highlighted, this is the earnings report just a couple of weeks ago, or last week, I guess. Dermatology, 80 million people in the US population. This is one of their biggest segments. They just have 4 segments right now: sexual health, dermatology, mental health, and weight loss. Hair loss, acne, and aging are 4 of their segments right now. Rosacea and eczema are 2 that they're looking for in the future. So this is still going to be a part of the business, and a pretty sizable part of the business, but maybe it doesn't necessarily make sense to have a completely separate website for that business. That's why it's being moved to himsandhers.com. I think that's really the way to think about this if you're an investor. Yes, they're technically shutting that site down. Maybe it wasn't handled all that well if you're one of their customers, but this is the move for them long term. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other 2 things that I wanted to show in context with the volatility that we've seen in the stock over the last few weeks is strategically, where is HIMSS and Hers going? And then what's the impact of GLP-1s going to be for the company. And I thought this chart was actually really helpful. Share of observed customers in the industry, HIMSS and HERS has gone from 10% market share of those customers to 47.5% market share, almost 50% market share. 30 Mason, Roman Health, Noom, Curology, BetterHelp, all of these companies are trying to do something that's sort of similar to HIMSS and HERS, a little bit different depending on the company, but these are their competitors. And you can see that HIMSS and HERS is the biggest name out there. Same thing with observed sales, 47.3%, so almost 50% market share there. So doing really well strategically. And with that context, the loss of semaglutide is going to be a big deal for the company's operations. But there are other solutions that the company has, oral-based solutions. Liraglutide is going to be coming later this year. Not quite as effective of a solution for a lot of different customers, but they're also going to be able to keep some of those personalizations. So they talked on the last conference call about one of the reasons personalizations are so effective is you're able to actually adjust your dosage to the actual person, the injections that they actually sell. And remember, you can get Ozempic and Wegovy through HIMSS and HERS. You can actually get these name brand products. But these products are going to come with a certain dosage, and if that dosage is not necessarily appropriate for you as a customer, that's where something like a compounded product that's personalized is going to be potentially more cost effective, much more effective, and potentially even more cost effective. The other thing I want to note, Wegovy announced they're going to have a direct-to-consumer site, and that is going to be about $500 a month. So we've already seen that this pressure that compounded semaglutide brought to the market, the pricing pressure starting to make it to these branded products. Don't be surprised if you start to see these branded products on HIMSS and HERS at a significantly lower price point than you see right now, still $1,800 or $2,000 respectively for Ozempic and Wegovy. And even after all that, now remember, management knew exactly what was going to happen with GLP-1s when they reported their most recent quarterly report. And still, they said they expect revenue to grow about 90% in the first quarter. That's going to include the impact of GLP-1s. But look at this second half of the year. Even if you take out this first half, the second half of the year, 56 to 63% full year revenue growth. That means that they're going to grow probably in excess of 35-40% in the second half of 2025. That is on top of the comparisons. Remember, they started selling GLP-1s in Q2. So that comparable number, the final 3 quarters are not going to include compounded GLP-1s, at least on those commercial dosages. But the comparison, the growth rate is going to be compared to when they were selling GLP-1s. So still a really, really solid growth company. And what I can't get over is how cheap the stock is compared to a lot of other growth stocks out there. Now, there are artificial intelligence stocks, all kinds of stocks that are in maybe more popular sectors, but HIMSS and HERS has an enterprise value of 5 right now. 5 and growing, even without GLP-1s, growing in excess of 40, maybe even 50% in 2025. That is a phenomenal growth rate for that valuation. So that's one of the reasons I'm excited about this company. These moves are going to get a lot of headlines. Shutting down one of your sites maybe looks bad, but what it really is showing you is this is becoming much more of a platform company. They're trying to push customers to HIMSS.com and HERS.com. That is good for the company long term because you want that to be where the ecosystem on the internet. The companies that win are the companies that customers choose to go to time and time again. I think that's becoming HIMSS and HERS more and more. So still like their position. Expect this to be a very, very volatile year, but one that I would potentially buy even more opportunistically throughout the year. So we'll see where things go from a stock perspective, but hopefully that's helpful in understanding where their operations are going in 2025. Let me know your thoughts in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.